there's no doubt that renewable energy sector is sunrise sector in India. And within that, solar energy is the future of renewable energy. Every country in the world has pledged to reduce their carbon footprint, and renewable energy production using solar power is one of the critical parameters to reduce that carbon footprint. Even Indian government has set a very audacious target of achieving 300 gigawatt of installed solar capacity by 2030. Currently in FY23, this installed capacity is just 63 gigawatt. Now to produce such immense solar power, India would need to set up solar projects at huge scale. That's where Borosil Renewable is positioned as the only Indian solar glass panel manufacturer. Clearly the potential looked immense, isn't it? In fact, it was also visible in its share price, where the share zoomed from lows of 35 rupee during COVID to levels of 830 rupee, generating crazy 20 times return within 2 years. However, since last 1 year, the stock is on continuous decline trend and has fallen more than 50%. So in this video, I've tried to explain the reason for correction in Borosil Renewables and whether this correction has created an opportunity to accumulate Borosil Renewable or not. But before we proceed, this video is only for educational purpose for long-term investors. Make sure that you do your own research before investing your money. Alright, let's get started. Friends, before I proceed, I want to address some of the negative comments where people have commented that all my stock recommendations are down. First of all, let me share an insight that I get from YouTube on my video. There's something called like to dislike ratio. It suggests out of 100 people, how many people have liked my videos. And I'm so happy to share that out of 500 plus videos that I've done so far, my like to dislike ratio is between 98 to 99%. It means out of 100 people that watch my videos, 98 to 99% like my videos. So that's a big encouragement. Thank you so much for your support. Now coming to those negative comments, I mentioned it in my every video that I don't provide stock recommendation. I'm against the idea of giving stock tips from day one. If you buy and sell stocks based on tips or recommendation, then you can never make money in stock market. If you want to make money in stock market, then you have to learn how to analyze the stock yourself. The problem is that in spite of mentioning it in my every video that the video is only for educational purpose, some people still end up investing their money without any knowledge, and when the stock fall, they blame me. Another point is that I was analyzing the market and found that today 50% stock with market cap of more than 1000 crore are down more than 40%. It means every second stock in the market today with market cap of 1000 crore and more is down 40% or more. So it's not just the stock I discussed that are down, the entire market is down. In fact, I never recommended those Adani stocks that tanked 70-80%. I never recommended those newest stocks like Zomato, Paytm, Nykaa that tanked 70-80%. Yes, many stocks I covered have also fallen, but you need to understand that when I discussed those stocks in 2021, it was mother of bull run. So this correction is not because those stocks are bad. It's because the entire market has fallen. And that's where you need to understand the business of the company so that you can actually utilize that fall as an opportunity. Because I'm sure many of the stocks that I have covered and have fallen are eventually going to bounce back. That's where you need that right knowledge to identify which stock to accumulate. Thankfully, in my case, there are less than 1% audience who invest blindly, and majority of my audience is intelligent. Honestly speaking, I'm not looking for more views or subscribers. I only want those people to watch my videos who are genuinely interested in long-term investment and analyze the stocks themselves before investing their money. In case you are still looking for tips or recommendation, please go ahead and unsubscribe my channel and do not watch my videos because it is not going to help. And just one more thing, I never do paid stock recommendation. They are completely honest. Yes, I might get wrong sometimes, but there is no person in stock market who has only taken right decisions. Alright, now coming back to Borosil Renewable, so there are two major reasons for sharp correction in Borosil Renewable share price. First reason is sharp fall in operating profits. Borosil operating profits have sharply declined from 245 crore in FY22 to 124 crore in 9 months of FY23. This fall in operating profit is due to sharp fall in operating margin that have declined from 39% in FY22 to 25% in 9 months of FY23. Since the share price movement is directly linked with companies' earning, fall in earning resulted in fall in share price. And second reason is sharp decline in market liquidity that has resulted in companies' valuation to fall from average PE ratio of around 50 to current average PE of around 40. So fall in P multiple due to liquidity drying up also resulted in fall in share price. Now it is very important to understand why Borosil Renewable operating margins have fallen sharply from 39% in FY22 to 25% in FY23 so far. And there are two major reasons for this sharp decline. First reason is removal of anti-dumping duty. I did a video on Borosil Renewable last year, and in the risk section, I mentioned that China is the largest manufacturer of entire solar value chain. In fact, 95% of global production of solar value chain is controlled by Chinese companies, and within that, 95 to 97% solar glass manufacturing is with China. And that determined the international prices. So in my video, I mentioned that Borosil Renewable, in spite of being the only Indian company to manufacture solar glasses, doesn't command control over the solar glass prices. These solar glass prices are benchmarked against the prices of Chinese solar glasses. It means if the solar glasses prices increases, Borosil Renewable margins increases and hence profit increases. And if the solar glass prices fall, it adversely impacts Borosil Renewable margins and profitability. Now obviously Chinese companies are heavily subsidized and operate on huge scale and hence able to dump solar glasses at very low prices. So that removes the level playing field for domestic Indian companies. Hence, in order to encourage domestic solar glass manufacturer, what Indian government did is they imposed anti-dumping duty on Chinese solar glasses. So that in terms of pricing, Indian companies can compete with Chinese companies. Otherwise, if Chinese companies can dump solar glasses at very cheap prices, then why would anyone buy solar glasses from Borosil Renewable? So this anti-dumping duty was imposed between 2017 to 22. But last year, this anti-dumping duty was removed. As a result, the solar glass prices have fallen 5% year on year. On top of that, the production cost of solar glass has increased due to crazy increase in utility prices. Although now the gas prices have fallen. Hence, increase in production cost and fall in product price has resulted in sharp fall in operating margin of Borosil Renewable and hence impacted the share price of the company. Now at this point, the question is, what is the future of Borosil Renewable? That would help you understand if you should buy, hold or sell the shares. Friends, before we proceed, let me inform that now I'm also available on Spotify. So if you like to listen to the podcast, then you can find me with name Personal Finance 101 with Sahil Bhadviya. In fact, you can also watch my videos on Spotify. I provided the link below. Now, as per report, the domestic module manufacturing capacities are expected to rise from current levels of 25 gigawatt to 65 gigawatts in the next 2 to 3 years, which will increase the demand to 3 times from present level in the next 2 to 3 years. That's a huge opportunity. Even Indian government has big plans to push the growth of renewable sector in India. Government has target of achieving 300 gigawatt of solar capacity by 2030, which is currently at 63 gigawatt. So that's nearly 5 times growth potential in the next 8 years. For example, recently government has announced 19,000 crore worth of National Green Hydrogen Mission. Then there is PLI scheme worth 24,000 crore on domestic solar cells and module manufacturing. Moreover, please note that 21st century is all about electric vehicle and you would need a lot of electricity. Now, if the electric vehicle consumes the electricity that is coming from thermal plants, then it would completely beat the purpose of carbon neutrality. Hence, the electricity has to come from renewable sources and that would create huge demand for solar glasses. In order to meet this growing demand, Borosil Renewable is increasing its capacity. They have started trial production of their third furnace from 26 January 2023 and commercial production is expected to happen soon. This will increase their production capacity from 450 ton per day to 1000 ton per day. That would eventually result in more than double sales and would also help them achieve operating leverage. Borosil has also recently acquired a solar glass plant in Germany that has added operating range of 300 ton per day to Borosil capacity and also widened its range of offerings. Cold repair of this furnace will be carried out during March and April over 45 days and thereafter the furnace will be put back into production. So from demand perspective, certainly there is huge demand. The problem is Borosil doesn't have enough capacity to meet all the demand. In fact, there is also a lot of demand in Europe and Borosil has also increased its exports to Europe where they get better margin. So the more Borosil will manufacture, the more its sales would increase. And that is actually the plan. Just to give you an idea, in 2018, company had one furnace with solar glass capacity of 180 ton per day. That got increased to 450 ton per day with the addition of second furnace. Then recently in 22, Borosil added another 300 ton per day of capacity in Germany. Then in 2023, company is starting third furnace with additional capacity of 550 ton per day. This would take the total capacity to 1300 ton per day. And company has announced fourth furnace in 2024 with capacity of 1100 ton per day. That would take total capacity to 2400 ton per day. Look at the sharp growth in manufacturing capacity. So looking at the internal domestic demand as well as export opportunity, Borosil additional volume production can be easily absorbed in the market. That would result in sharp jump in sales. However, the problem is profitability. In terms of profitability, since company doesn't have control over the pricing, its margins would be volatile. 2021 and 22 was exception where the operating margins zoomed to levels of 38-39%, but now they have normalized to levels of 25%. The reason for sharp jump in margin in 21 and 22 was supply disruption due to COVID and fall in import from China. Hence, there was high demand for solar glasses from Borosil that resulted in sharp jump in margins. However, now the Chinese imports are again back to normal and that has resulted in fall in margin. So in the near future, Borosil share price movement would depend upon its operating profit that would eventually depend upon margins. If the margins fall, its earnings would fall and that would result in fall in share price. And if the margins improve or remain constant, the incremental sales would result in higher profit and eventually the share price would increase. So in a nutshell, everything would depend upon pricing which is not in Borosil control. I think this is the reason why domestic institutional investors have avoided Borosil Renewable share, although FIs have increased their stake in last 2 quarters. However, when management was asked this question on margins, the response was that 21-22 margins of 38-39% were not sustainable. In fact, they even mentioned it in their previous con calls. But going forward, they expect margins in the range of 25-30%. So if they're able to maintain the margins, considering the growth prospect, the current valuation is looking decent. I was also looking at brokerage house calls on Borosil and HDFC Security has given a buy call with a target price of 529 rupee. So I think that for long-term investor in Borosil Renewable, it is better to hold the share and watch out for margins in the coming quarter before you take a call on buy or sell. We have clearly discussed that in terms of sales opportunity, the opportunity is immense. And companies also adding more and more manufacturing capacity. The only problem is profitability where Borosil Renewable has intense competition from China. So from here, if you go with management guidance, the margins should stabilize. And if the margins stabilize, the profits will increase due to increase in sale. Now as an investor, I would request you to analyze the situation and then take a call on buy or sell. From my side, I've tried to clarify the reason behind the fall in Borosil Renewable share price. I hope you'll find this analysis useful. And if you want me to cover any other stock, let me know in the comments. I'll see you in the next video. Till then, take care.